Good afternoon, Scott Redler T3 Live. Welcome to today's recap. Today is Tuesday, and it was a turnaround Tuesday. I'm kidding. Yesterday the market closed, very harsh close, heavy volume, looked like a little bit of, not say capitulation, because usually capitulation happens when a move is done and no one's really sure whether this down move is done. We were hoping to get some kind of gap down. So with that being said, the oscillator was minus 81. We were very oversold, so we talked about at least not being short into today. But being prudent long, when you close in the dead lows, you never know what's going to happen the next day. So most of us went home flat and then had to figure out a way to make some money today because there wasn't that much opportunity. So the question is, where are we now? Was today the start of a big rally? Was yesterday the low? I would say probably not. Just the question is, how much further could we go back up to test some levels before maybe you could be a seller there or even get short? Because no one wants to start too early, considering we just came in a lot, but nobody wants to buy too early as if, we could see the 200 days. So that being said, it's a little bit of a tough spot. So I think taking trades and knowing why you're in certain stocks is the way to go. So if you look at the chart here of the SPX, you will see here is the intermediate trend that was broken right around the 1770 that we spoke about, and here was your accelerated trend. So with that being said, you take a closer look and you could see today really was not that much. Okay, the bears, I would say, still in complete control. Okay, you have you look what happened here when we broke the accelerated trend around 1825, 1830, boom. You then, you could almost use this as the two-day move. It then did a bear flag. People thought maybe we could retest this trend line before going lower. Didn't happen before rolling over. So now with that being said, you look at where we are now. Okay, we are above the 150-day, above the 200, below the 100, and it was just an up day. So the indices did not tell you much today as far as the type of bounce. To me, first glance, looks like a feeble bounce. But it doesn't mean that with a little bit of more of a bounce, maybe the overseas market bounce, maybe we get an economic number tomorrow that's, not as bad as the recent ones, that we can test the 1770 or maybe even push up a little bit higher, before, potentially seeing some selling pressure. But with that being said, it's been red, green, and then red. So, we haven't had two green days in a row in a while, so I think a lot of people are betting against that, so maybe we get another push. So with that being said, though, I did not take the spiders long with some of my positions. I took it as a hedge. So anyway, as I try and go through other sectors to see, was anything blaring saying that we're going to continue lower or we're going to continue the bounce? Not really. Most things look the same. You look at the XLF, here was the accelerated trend. Here was today, took back or stopped right about a half. Nothing really telling you anything so great there. You look at the XLI. Actually, this one gave you a red dog reversal where it actually was able to come below the low and come back up. So, if you did a red dog reversal there, maybe you made some tactical cash flow. Now see if that can go a little bit higher. You go IWM, the Russell. This too, went from, they tried to pressure it through the lows and it couldn't, and it bounced a little bit and still has room but doesn't necessarily have to retest. So, the better setup today, was a down open, which we didn't get, and then maybe they had enough selling pressure to break us through yesterday's low to then get a decent reversal with room. None of that took place. We opened higher, floated around. You had to be very tactical, and there's not much to be said except for this could have been just a day in the life, and hopefully you booked a decent, P&L, or you didn't get too hurt trying to, push your fingers too much. With that being said, let's just run through some stocks. Apple. This lower pivot is kind of interesting, not very interesting, but kind of interesting. Here is that red dog reversal. It opened up yesterday and then couldn't hold it today. It held it. Maybe it tries to get in this gap. For Apple, you still have a lot to prove here. Okay, this might be just a tactical trade. It might not even be that good. But right now, I know for me, I like to trade it when it gets into the gap if it were to be there. So if it were to get in that gap without me owning some, I'd be upset. So with that being said, I am long a little Apple, and my line in the sand is around 505. Okay, if it opens flat to down, maybe we could buy it through today's high, and then you have 515. You also have this 200-day right there. There's a lot of resistance, but maybe there's a trade there. Okay, I'm thinking that they don't make it that easy for the shorts to keep this huge gap there that they want to, maybe induce some buying in, and that could be a decent trade if you're not caught in that. But as of now, we'll see what happens here. It's a B setup. It's not something to devote your entire attention to, but it's holding in a little bit more where maybe you get that extra push. Facebook still holding the earnings gap. Inside day, green. Tomorrow, if it gets above 63.77, perhaps that can continue. Netflix, still holding, was weaker in the morning and then wound up, coming back up, held the 8-day moving average, still flagging. It's definitely a stronger stock. Tesla, took 2 days off, but overall, people are like, oh, what's wrong with Tesla? P.S. It held the 8-day and still flagging after a really nice move from this area. So it's still in the game to continue. It doesn't have earnings for another few weeks. So, if you want to try and stay with it, stay with it. This thing has a lot of overnight risk both ways. So maybe intraday, take a look at it tomorrow. We'll see. Twitter, I took a small little stab just because, I don't know, I feel like I want to be in it. You remember this nice move from here all the way up there? Well, now it's holding higher. It's holding the Facebook gap. It's right in there. What I did today is I bought some 62.50 weekly calls just to be in it, small amount, because in my head I'm like, you know what, if it's a really good report, chances are it's going to attempt to take out the prior high of 74.73 because there's such a big short interest. Everyone's kind of betting against it. So if it's negative, I think it comes back in, but it'll be buyable with the comment because I do think that Twitter is here to stay. I don't think this is a flash in the pan. I think at some point, whether it's this quarter or next quarter, this gets taken out and could be on its road to 100. But again, I'm putting some numbers out there at this point. We shall see. Overall, acting very well. People are accumulating it. I think that this company, to me, if in the back of your head you would say, okay, if you come back to me, because I'm going to smile. Okay, this, in my opinion, long term, has the staying power. I think at some point they do like Twitter Plus, and you have more characters that you could write. At some point, I do think that it'll be more robust, like a Facebook, and I also think it could be a PR newswire. It could be so many things. And think about if you had to give up one thing: your LinkedIn account, your Twitter account, or your Facebook account. What could you give up? Probably not your Twitter account. But anyway, that's just some Buffett type thoughts as far as the numbers. Who knows? Maybe they'll be good, but it'll show the revenues being small and the earnings being small and their market cap being big, and it doesn't go. That's why I'm taking options instead of the stock. And if it's tradable after hours, maybe just like Facebook, you go back to the chart. Maybe after hours, if the number is good, you could be a buyer above here, a buyer above there, and then if it gets above this and holds, you could trade it after hours. Kind of like what happened with Facebook. Facebook after hours, do you remember, you could have been a buyer above 55.29, you could have been a buyer above 58.58, and then it was at 62 that next morning. So with that being said, you didn't have to take calls into it, but if you did, you got paid, and you also could have traded it after. Anyway, let's continue. As far as other setups, I did get long BHI. Okay, so if you look at my VTF, you'll see I have 4 or 5 different stocks just because I have a reason for all of them. This is an earnings gap, consolidating above the 8-day closing strong. If we were to get another green day, it looks like BHI could continue higher. Okay, it's showing some relative strength. I probably should have went with CRM because that too is showing relative strength. I missed it. I didn't see it till the end of the day, closing near the high. So this is also becoming a go-to chosen name, as this could take out this area. And then there's some little guys. I'm going to say, I know Sperling's been accumulating this for a while. We shall see. I just got, it's just on my VTF. I don't know really, it's a bio. It's got a descending channel here, and who knows, maybe it could break this area to continue. So we'll see. That's a small position. I usually don't do bios, but I went into this one small. There's a lot of big action in the bios. Also, we've played this plug from time to time, and it had a huge move. It peaked out there. Today woke up a little bit, closed strong above this little bull flag. If you go to volume, just to see some volume that came in, some small volume came in. So that's another little guy. So that's the reason. So those are the reasons for the 2 little ones. And then, like I said, I think Facebook, if the market hangs in there, should make highs. It's holding up real strong. So those are the reasons why I'm in some of those positions on the VTF. As far as the market, again, you have to know your time frame. If you're my age, There's no reason why you should be happy that we're pulling in so you can continue your cost average into your macro positions. My wife, who started in 2004 as a doctor, she started in 2004. The best thing that happened to her is that she put money in every single month through 2007 to 2008. Then last year, when we were all-time highs, she had a nice, average rate of return. So with that being said, could we have sold it, to start the year knowing that we would pull in? Why would you? Because who knows if you get back, just stay the course so you continue to, to contribute in that type of scenario. If you're trading for P&L, you're trading for alpha, you hopefully you honored that accelerated trend at 1830, you honored the 1770 level, so, you could have made money short or not had the pain of yesterday and then, dabbled a little bit today. So it's all about your time frame. It's all about your commitment. Don't get caught up in the headlines. I know a lot of people out there saying 10, 15, 20, 25%. Who knows? We might go to a 10 to 12. No one knows. The market will tell us. As of right now, we know we broke the 100-day. We opened up today. Feeble type bounce. Maybe it builds a little bit. Maybe it doesn't. But we see some stocks that are able to buck the trend and be near highs and go green when there's a sea of red. And we'll just keep doing that until something gets a little bit more clear. Gold, some people were asking me about. It still hangs around. Gold still hangs around. It basically is wedging right here into this trend line. I know last time it tried to break above, it gapped lower, looked good yesterday, gapped down. It's definitely very random, but at some point maybe there's a trade here, and if this starts breaking above 122, you'll know that we probably take a little bit of a leg lower in the S&P. As far as the TBTs, finally, one up day. I wouldn't start, getting all excited about going, with two handfuls of the TBTs for rates, but you do have a pretty sharp descending channel here, and if it were to start to get above this 70.45, maybe that'll help fuel a bounce, and then, you could see some type of trade back to 72-ish, considering we came from here when we broke this area, okay? So with that being said, maybe, we've seen this before, that's why it's so tough to trade. You get a little bit more movement, which should help the banks and should help morale, so to speak. And you have the jobs number Friday, so if we're just in line in the jobs number, maybe that'll help a little bit with the relief. And I think the consensus is like 180 for now. And that's it. There's not much to go over. Hopefully, if you were short, you covered on the close yesterday as we got extreme in the oscillator. If you didn't come in long today, you know what? I would say you did the right thing. I didn't come in long today, and it was definitely hard to make money, and hopefully you didn't get frustrated and lose money. There are definitely some stocks to continue to stay with if you need to stay with them. If you've been holding a portfolio and you've been trading futures around them, to help fund your positions as we've broken levels. I think a lot of people have been doing that, and they've been pretty happy about it too. They're taking advantage of their technical trading prowess. Anyway, that's it. I'm going to stop right here. I have a meeting tonight. I'll be in tomorrow. It's supposed to snow again. If for some reason the roads are crazy icy, I'll try and do it remote, but chances are I'll be here as just like the sun that rises every day, which we haven't seen in a while. That's what we try and do here. Work hard, play hard, and try and get things done. Have a great night. Bye-bye.